Hello everyone, my name is Prathamesh Malia. Today we are going to discuss about currency, how these markets work, and what are the developments in this particular market, and what one needs to learn in order to understand the basic of currency derivatives. In this webinar, we are going to cover four major topics in perspective. The first would be currency market as a whole, the global picture, the foreign market picture in India. Why do you need to trade in currency derivatives in India? And who are the participants in forex market, which generally drive the volatility of this particular asset class? From a global perspective, it is one of the most liquid as well as largest markets in the world, and it is one of the backbone of international trade and global investing. As you can see on the screen that it is 5.1 trillion market per day, although the estimate seems to be 2016, but then forex market continues to be the largest of all the asset classes that have been traded across the global world. Since we're trading in forex market, dollar as such, which is the reserve currency, which is being traded globally for all the trades that happen in the international arena, dollar really comprises of almost 85% of the total transaction that involves the trade in the global market, and it acts as a major cross currency transaction. It is a major vehicle currency across currency transactions. As you can see in the pie chart above, that USD contributes almost 62% of the total FX global reserves. Hence, the importance of dollar cannot be removed from the foreign market, as it being one of the largest currency traded across the globe. From an Indian perspective, there are three exchanges that offer currency as a platform for trading. And the first one is NSE, second is PSE, and third one is MSCI. Besides online trading, you can also trade currency over the counter via banks. From an Indian perspective, the currency pairs that are traded on the Indian exchanges are USD INR, GBP INR, Euro INR, JPY INR for all the INR based contracts. While for the cross currency, you can have Euro USD, GBP USD, USD JPY for cross currency contracts. You have futures and options, both available for all the currency pairs that I just mentioned. Important thing to note that this currencies are available to trade, and the exchange timings are from 9 a.m. to 5 p.m. for INR based contracts, while it is 9 a.m. to 7:30 p.m. for all the cross currency contracts. The best thing about the asset class is you can trade on currency derivatives by just paying 3% of the total investment. And the best part about the asset class is, since it is one of the biggest asset class across the world, even on the Indian exchanges, volumes have been increasing over the years. As you can see, that 2018-19 figure stands at around 35,000 crores per day, which is nothing but a significant proportion of the financial asset class that's being traded. It is important and imperative to understand why do we need to trade currency derivatives. The first thing that is it has a moderate volatility, which clearly means that the risk proportion in this asset class is less compared to other asset classes. The second benefit that is received by trading currency derivatives is you can trade with just 3% of the margin, which means less margin is required. It is used as a hedging tool for all those who have exposures with foreign currencies. It can be US dollar, it can be euro, it can be Japanese yen, it can be any other currency that's being traded globally. The best benefit of currency derivatives is the cost of transaction in trading this asset class is significantly less when compared to other asset classes. Since this is traded globally, it is one of the easiest asset class to understand if you're trading in currency derivatives. For basic investors, I think it is imperative to understand who are the participants in the forex market. The participants in the forex market comprises mainly of five people, you can call them as hedgers, commercial banks, central banks, exchange brokers, and speculators. Without hedgers and speculators, you really do not have this market anywhere to go. Commercial banks also play an important role being on the underwriting side of it. Central banks, since they are involved in the global stage, you cannot ignore the importance of central banks. For traders and investors, it is important to understand what is available for them to trade on this platform. I think, as seen in the presentation, there are four currency pairs that's being available to trade. The first one is USD INR, Euro INR, GBP INR, JPY INR. To understand this, how do you trade this? Unit of trading, which means the contract size is $1,000. The underlying for this is the exchange rate. For instance, if you're trading in USD INR, the exchange rate in INR for US dollars. Tick size is nothing but bare minimum price movement upside or downside in particular currency. In this case, it is 0.25 paisa. You have 12-month trading cycle if one wants to trade or invest in this particular asset class. Trading hours is 9 a.m. to 5 p.m. Settlement happens on T plus 1, while the final settlement happens on T plus 2. How do you read a currency code is one of the important things that one needs to understand if you're trading currency. There are 4 to 5 things that one needs to look at. What is the currency pair? What is the base currency? What is the code currency? What is the bet price? What is the ask price? Let's take an example. In this case, it is USD INR. The currency pair, as stated, it is USD INR. The base currency is the first currency. In this case, it is dollar. The code currency is nothing but second currency, which is nothing but INR, which is rupee. Bid price and ask price are nothing but the buying and selling price of this particular currency derivatives, which is available to trade. It is imperative to understand how much movement in currency, if it is USD INR, gives you profit or loss. Since one tick is 0.0025 paisa and the total size of the contract is $1,000, with one tick you can gain 2.5 rupees. Or the basic sense to understand is 1 rupee movement in USD INR will give you a profit of 1000 rupees or a loss of 1000 rupees. Thank you very much.